Good morning. This is Robert Sijpesteijn bringing you this morning's market update. Starting in the US, we saw indices continue to rise while the dollar weakened against its majors. The US 500 climbed 13 points to close on 1,940.78. The US Tech 100 added 19 points, closing at 4,229.48, and the Wall Street gained 85 points to end the day on 16,253. In the commodities sector, gold was a non-mover, remaining flat at $1,120.80, while Brent crude dropped 93 cents, closing on $48.34 a barrel. While the collapse in crude prices pushes Russia's economy into a recession, the nation's oil producers are managing to beat the Western counterparts on measures including cash flow, profit margins, share prices. OAO Rosneft, Lukoil and OAO Gazprom Neft are performing better than Royal Dutch Shell, BP and ExxonMobil. The reason for this is when oil goes down, the Western companies are hurt more than the Russian companies because Russian tax rates adjust automatically to lower prices. The nation's companies enjoy a buffer to the slump in crude, while a lot of the hit is taken by the government, as stated by Maxim Edelson, a senior director of Fitch Ratings in Moscow. The tax and currency benefit this year means Rosneft and Lukoil will yield free cash flow at more than twice the rate of Shell and BP, according to Barclays Place data. Russian producers are generating cash as if the price of oil was still $100 a barrel rather than $50. Sticking with oiling firms, it's the cheapest opportunity in 6 years to be a shareholder in Europe's largest oil and gas company. BG Group Place, the oil and gas producer Royal Dutch Shell Place have agreed to buy for about $70 billion, is trading at a price equivalent to paying just over £14 for a Shell B share. That would be the lowest valuation for Shell since the global recession of 2009 and a discount of 13% to the company's current share price. Investing into BG is currently the cheapest entrance into Royal Dutch Shell if you believe that the acquisition deal is going to go through. Shell's chief executive officer, Ben van Beurden, is staking his reputation on the deal and has said he's confident of it closing early next year. The takeover will make Shell more profitable and resilient in a world where oil prices remain low for some time, he said in an emailed statement August 9th. After the deal, Shell would control a fifth of the global liquefied natural gas market, getting gas assets from Kazakhstan to Tanzania and the US, and some of the biggest oil discoveries in the past decades in deepwater fields in Brazil. For each BG share, Shell offered 0.4454 of its own B shares and 383 pence in cash equivalent to another 0.24 Shell shares at current prices. An investor who bought a BG share today and held it until the deal completed would end up owning a share in Shell at a price equivalent to 1,406 pence, compared with a closing price of 1,610 pence on Monday. Looking into Europe, equities extended their rebound for a second day, led by gains in auto-related companies and commodity producers. Rio Tinto Group contributed the most to gains, in a gauge of miners rising 1.2% after giving a bullish assessment of China's steel and copper demand. Glencore Place added 1.7% among car makers. BMW AG and Volkswagen AG rose at least 1.8%. The UK 100 rose 40 points to close on 6,100.3, and the Germany 30 gained 116 points, ending the day at 10,168.9. Early into this morning, both markets have continued their rise, with the UK 100 climbing 76.5 points at 6,153, and the Germany 30 rising 190.2 points at 10,296.3. Despite positive growth in the auto-related and commodity sectors, trade data released earlier today from China showed a sharp drop in the valuation of both imports and exports, amplifying concerns about ripple effects from the country's economic slowdown into developed economies. Decelerating economic growth not only means China is buying less from overseas, but reaping less money from its shipments too. As prices fall and buyers in markets such as Europe and Japan curb purchases, the value of imports fell 14.3% year-on-year in renminbi terms in August, a steeper decline than July's 8.6% fall, the 10th consecutive fall and the worst showing since May. This may cause concern for European exporters and commodity sector firms as demand may decrease from what has been the largest consumer for several years now. In today's corporate news, Lufthansa pilot strikes are extended until Wednesday. Oil Search, an ASX-listed company, confirmed it has received an approach from Woodside Petroleum for a possible merger. Whitbread, the owner of Costa Coffee and Premier Inn, warned that it might raise prices to counter the UK's new national minimum living wage, and Berkeley Group said the firm was on track to deliver £2 billion of earnings over the next 3 years. In today's economic data in focus, at 10 a.m. in Europe, we see the release of the gross domestic product year on year for quarter two, as well as the gross domestic product release for month on quarter two. And at 3 p.m. in the US, we see labor markets conditions index for August. That's all for this morning's market update. Thank you and goodbye.